As I said, Calvin Treacy, a non-executive director, standing in for our managing director who's in Spain at the moment doing productive work. First up, a bit of a confession admission, and that is that we are definitely have a PR problem in tin. You know, everyone sees tin as a packaging product, but I think that those times have changed on. It's very much a technology enabler now and vital in the future. So that given, and with the PR issue that we do have, I think that in that lays an opportunity. So Elementos gives investors a rare and unparalleled exposure to tin metal. We're basically a company with two projects, one project in Spain, Oropesa, and another project in Cleveland. The Oropesa project is a greenfields project, open pit, and Cleveland is a brownfields underground mine. Both tin, both very interesting. So to cut straight to the chase, you know, you're all here looking for investments, so why do we present a unique opportunity? Firstly, tin. I think because it's probably an underloved commodity, there is that opportunity that as sentiment changes towards the commodity, there's an opportunity to see an improvement in the price dynamics. And certainly the supply and demand situation in tin looks very promising for shortfalls from our perspective in the future. We also are quite an attractively priced share at the moment, with a market cap of between $30 and $35 million, depending on the day of the week. And given that we've got two projects, both with JORC resources or reserves, that's interesting. Obviously, the projects are both good. And I also think a very large element of what is appealing about the organisation now is that we have a very strong team. So Joe David, engineer, supported very ably by quite a good board. So I suppose actions speak louder than words, and to support this proposition that we are actually a very appealing investment opportunity, Metals X, which is Australia's only listed tin producer and one of a handful of global listed tin producers, have recently invested $5 million into us to take a strategic 19.9% share and taken 2 seats on the board. So I think it really demonstrates that the quality of our projects and the fact that, you know, a large existing tin miner has actually decided that being invested to that level is actually a good situation. So this is a very recent update. From a supply and demand sort of perspective, without getting into the detail, I suppose what you can see on the graph is that fundamentally, from a supply point of view, we're seeing that it's falling from, you know, top left to bottom right. The demand, on the other hand, because its use in AI, which is segueing from the last presentation, is sold as in electronics, is really driving demand, and so therefore we're seeing supplies basically depleting and demand increasing, and this is, you know, fundamental, restriction, because there's been an underinvestment in projects over a very long period. So we feel that our two projects present a real opportunity to bring on tin supply in first world jurisdictions. So, you know, basically trying to supply tin into this dynamic. So obviously, you know, it's all about the projects when you come along to these sort of things. So Oropesa is really the only integrated mine to metal tin project in Europe, based in Spain. So fundamentally, our strategy for the Oropesa project is to produce concentrate from the mine, and then we've taken an option on a tin smelter, which is actually very close, 200 kilometres from the mine site, to produce tin metal. There's a huge demand from manufacturing within Europe for tin metal for electric solder, as I alluded to before, but also solar panels, glass, coatings, batteries, things like this. So generally speaking, the tin now is primarily used in high-tech applications, and Europe being a large manufacturer with no domestic or EU supply of tin gives us a really interesting point. Another thing that's worth pointing out on this is that the way tin is priced, there is actually a premium paid for tin that's smelted in EU. So that already has a bearing on our economics. The location of the project is actually fantastic. Down in a mining province within Spain, but we're located actually between two of the only, I think there's 3 or 4 tin smelters in all of Europe, and we're sort of pretty much in between 2 of them. So there's the Rogliano tin smelter, which is the one that we actually have an option to take a 50% equity stake in, and then there's an Atlantic copper smelter down in Huelva. So gives us a lot of options around what we can do with the concentrate, and making sure that we minimise transport costs and keep the tin completely mined and smelted within Europe. Fresh off the press in May, we've actually completed a definitive feasibility study. From our perspective, this feasibility study was done at a very high level of engineering. So it's not a study that was done to market the project and sell out. It's actually a study that was done to really be able to build the project in the short term. The real key numbers that I take away from the project are the all-in sustaining cost of production at $15,000 a tonne. Now, tin at the moment trades in a range of $30,000 US to $35,000 US a tonne. So in looking at this project, we wanted a project that would be able to trade through dips in commodity prices, because we all know that commodities will tend to go up and down. That's why they're commodities. So in a greenfields project like this, you want something that has enough margin that if the tin price does go down to $20,000 a tonne, you're still producing cash. So that was one of the real key figures that came out of it. The other key figure that I think is worth highlighting is the fact that the life of mine EBITDA at $30,000 tin is $1 billion, thereabouts in Australian dollars. And that's based on 30,000. And the long-term outlook for tin is sort of probably closer to 35,000 than 30,000. So, from a project point of view, it's pretty interesting, is what I'd say. And the NPV of the project compared to the market cap, there's massive difference there. As with all developers, we always like to play around with the NPV on projects, and so this graph sets out, the base case, which was used in the DFS. 270 million Aussie as a net present value of the project. But as you look at the spot price just on 18 June, which was 32,000, we're already put another 100 million thereabouts on the net present value. And it just keeps going up. The highest tin price that we've seen in the last 3 years is $50,000 tin, which was February 22, and at $50,000 tin, you've got an NPV of $1 billion. So you've got an interesting project that has, even at pretty conservative tin prices, a EBITDA delivery of $1 billion, but at optimistic tin prices, it's $1 billion NPV. So these are interesting numbers, and it's certainly given us a lot of faith to keep pushing through the development and funding phase of it. From a project point of view, an enormous amount of work has gone into the engineering, as I said. So basically, we've worked very closely with the authorities in Spain to make sure that the layout and the project design is acceptable from an environmental and impact point of view. These slides really are just depicting the level of work that we've actually put into it. We've also done a lot of work on pit shell optimisation and converting the resources into reserves. So we're one of the few, I think we're the only tin project in Europe now that has a reserve. So basically the reserve is the next level of classification within the JORC code that basically says that it's mineable, and this is the amount that you'll be able to mine. So it's basically yet again another endorsement of the level of work that we've been able to do. And that goes hand in hand with the DFS. Having 2 projects, it's a bit of a but there's more sort of project, which is always good. So Cleveland was actually the first project that we had. So it's a brownfields project. It was mined by Aberfoyle in the 80s, There's a real backstory to tin in Australia, and that is that, or in the world, that the tin price collapsed because there was a cartel that kept it up. And when that tin price collapsed, a lot of existing mines, such as Cleveland, actually shut down, even though there was still resource there. So of late, we've been actually doing some more work at Cleveland, some more exploration work, because not only is there a tin mine with a known resource in it, JORC resource in it, underneath it there is a tungsten resource, and in drilling that and doing some extra work on the historical core, we've been able to identify that there's a whole raft of critical minerals within that resource. So it has a huge amount of interest and upside that we're really excited to be able to keep developing. So this slide depicts basically the resources that we have. So in the upper part, in the green, shows the old mine infrastructure, which gives us access to unmined resources. But sitting below it in the red circle is a tungsten resource that was drilled, but it's a large porphyry that we've now been able to put a drill hole straight through and determine that there's a very, very large porphyry tungsten there. So we will continue to do drilling there, and this latest hole that we did, we also happened across a VMS-style intersection, which wasn't expected to be there. It was actually a misdirected drill that went through a VMS-style resource that actually had half a metre of 9% copper and 5.1 gram gold and silver. So we're very interested, so we're going back and doing some more drilling around that. So it's not a distraction, but it's an upside that we probably didn't expect to be there. So Cleveland is definitely a resource. What I'd also point out is Cleveland's about 100 kilometres away, as the bird flies, from Metal X's Renison resource in Tassie. So it's worth I won't say much more than that, but yeah, they're very close by, and could yield some interesting partnerships in the future. So as I said, so we have an interesting commodity. We're well priced. We've got two great projects, but I think we have a team that really is able to do it. So Andy Grigg is our non-executive chairman, 15% shareholder, was the largest shareholder until Metals X invested. Andy is actually ex-Bechtel, so one of the largest engineering companies in the world, and basically set up their mining and metals business worldwide. He's been very involved in many very, very large billion-dollar projects around the world. And generally, I'd say Andy isn't a detail guy, but with our DFS, he certainly leant right into it, really got into the detail. And very pleasing, and a real credit to Joe and the team that he gave it the big tick of approval. He felt that it was one of the better DFSs he's seen, and he's seen many, many DFSs. So he's basically, the wise head, and Joe is certainly the younger, more energetic driver of the project. So I think they've got a great synergy, and they work really well together. So that, supported by a very able board. I won't dwell on myself, but Corey's certainly a well-known managing director around Queensland and been managing director of a few companies. And Brett Smith is managing director of Metals X, and so he's actually also was a vice chairman of APAC and has done quite a lot of project development work in Northern Europe. So a great addition to the board with the Metals X investment. And Daniel actually will bring in some financial expertise, so he is CFO of Metals X. So I think we've got a really complete board, a lot of industry experience, very supportive, and really ably led by Andy and supported by Joe David. So just to wrap up, as I say, tin, very, very interesting commodity with a bit of a PR problem. We're a really good value investment at the moment with a pretty small market cap given the advancement of our projects. And those two projects, which I think gives us a bit of optionality around the development, and the team to develop it. So I think that if you take those sort of 5 key factors away, makes an interesting proposition. So thanks for hanging in there, and if you've got any questions, please come and have a chat to me.